it's the trade management that's going to make or break your bottom line, because if you get the trade management down, then it's scalable. If you don't have it down, it's not scalable. You're going to be inconsistent and so forth. But if you can get consistency in your approach to trade management, I mean, it might be entering and exiting after 2 bars. I don't care what it is, but once you're consistent, then you can make it scalable. The shorter the holding time, the greater the frequency of occurrence and the higher the win rate. So something like the S&P day trading, I'll have my highest win rate, and my holding time is going to be the lowest. And then the longer the holding time in general, the lower the win rate. You might have a couple false starts, there might be other things, but that's why trend followers can win just 32% of the time, but they know how to, hang on to those winners and really milk them. I don't believe in intuition. I
Yep.
mean, I guess you could say that it's like the sum of all your experience or something, but intuition implies that you have a feeling that you can't necessarily quantify or identify. And I just don't do that. I have to have a model. I love these boxes. You had 2 data points for resistance and 2 data points for support. So really important structure if you have that box. And then if you were just to take the middle of this box, we just came right back down to the middle of that box, where in market profile, if you smushed all the profiles together, you'd call that a point of control, one of a point of control, which provided support. So you have several scenarios. Here we just tested it and we bounced back up outside of that box. So that's constructive. The market never behaves exactly the same way as it did in the past. That's just pure Wyckoff. You're just starting out, you're going to learn to play the violin or the piano or the guitar or one, musical instrument, and then maybe you add to that. And so it's the same thing with the trading, just don't overwhelm yourself, because then you start to frazzle yourself. Then once you've found your style, you must be, does it work in consolidation? Does it work in a trending market? Does it work in a bear market? All that kind of stuff.
Okay, welcome back everybody to the next day of the TraderLion Conference. Thanks so much for tuning in. To start things off today, we've got someone who is extremely special. I really enjoyed speaking with her last year, and I think this year is going to be even better. We have Linda Raschke, who of course many of you know from New Market Wizards by Jack Schwager. Linda is a market wizard. She was profiled back in that excellent book, which I highly recommend, back in 1992. And she's an extremely experienced short-term trader who first got started back in 1981. Linda, thank you so much for taking the time to be with us here today, and really looking forward to this.
Happy to be here.
Yeah, excellent. To start things off, I thought I'd kind of throw you a curveball a little bit, so we'll see where you take it.
Okay.
But to start with, I know one of your passions, along with music, is horse riding. So I wanted to ask you, what kind of parallels are there between the markets and choosing a great horse, or that entire kind of selection process?
Budget.
Yeah, budget. Yeah, I'm sure.
How big is your trading account? Seriously. You know, choosing a great horse, it's gosh, there's just so many different variables that go into that. It's like it's got to feel right. You've got to, have a good chemistry with the horse. It kind of depends on the discipline that you're doing. A lot of times, if you have a lesser budget, or a smaller account size, you get a younger horse that then you take a while to train. And same thing with a smaller account size.
Right.
You have to start off small and just, it takes a lot more years than you think. Same thing with riding. If you bought a young horse and you wanted to train him for dressage, I mean, think about being a 7-year-old gymnast, little girl gymnast. It takes a long time to build up the muscle and conditioning. So to compete at the higher levels of dressage, it would probably take like, minimum of 8 years training. And so you have to have a lot of, time horizon and enjoy the process. And so that's a perfect parallel for trading. Start off with a smaller account. Maybe it takes you 8 years to get up to a certain level, but you have to enjoy the process along the way.
Yeah, excellent. And I was re-listening in preparation for this to your feature with Jack, and you were talking about your early trading career and how very early on you had built up a partnership with somebody. There's a stock that was acquired. It gapped up, and you were down in the hole $80,000, which was more than your initial stake, and so you're actually in debt. But what kind of astounded me was in that interview, it seemed like you weren't really shaken up about it. You had kind of seen what could happen, and you had seen other traders that could do it. But what kind of bringing back to that moment, what were you kind of going through mentally? What were you experiencing, and how did that kind of process maybe shape how you thought about trading going forward?
Well, that was my very first backer, and I was on the trading floor with equity options, and
Hmm.
I was short straddles in a takeover stock, and so yeah, it was an $80,000 hit, which when you're 22 and you still have school debt was a lot, and I gave back the account, which was initially 25,000, and I had built it up to I don't know 45,000, but then when I took the hit, I think I ended up owing close to 65 to 80,000. I don't even remember,
Wow.
those days,
Yeah.
but it was a lot. And it's like a lot of things looking back does no good. You can't say shoulda, woulda, coulda, da 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 da. Especially in this business, and there's all kinds of crap that happens to us all our life. I mean, you might slip on something and fall and, break your leg, and you can't go shoulda, woulda, coulda. It's like, okay, how do I deal with this now? How do I, get better and recover now? And so in this particular case, it was a little bit awkward just because I had to find a way to get recapitalized, in order to start,
Right.
paying back the debt. And I did find somebody who needed a stooge, I'll just call it a stooge, to run around on the floor. And we were doing early market making before you had these electronic systems that would keep things right into line. And
Hmm.
so he paid me a salary of $3,000 a month. That doesn't sound like much, but this is like 1981. And then a little bit of a profit sharing. And we did not make a whole lot of profits just because his style at that time was being short gamma. And so everything looked cheap because the volatility hadn't exploded yet. But this is right at the start of the bull market.
Right.
So, it was kind of a miserable 2 years running around putting out fires. And then I just thought I needed a change of scenery and left California where I'd lived all my life. Parted ways with Morris. We were still friends, but he didn't need a backer in Philadelphia. And in fact, later on, when I wanted to become a CTA, he provided me with my very first trading account because you need to show a record on other people's money, not
Hmm.
your own money, but you have to show that you're responsible with other money. So he gave me his mom, an account under his mom's name. But so I went to Philadelphia, and man, it was a lot of knocking on doors. Really, I had to approach maybe 10 different people or entities or firms or before I finally found somebody that would be willing to back me. So that's just a perseverance thing, and I just figured it was a different floor, different faces, fresh start, fresh energy, and then you just go forward. And then I think it was about another 3 to 4 years I had paid off the debt, living very frugally. I
Yep.
didn't even have a car, and I shared an apartment with another gal, and I slept on a futon. So we are talking about very humble here. And that's what it does. You just, keep going and one foot in front of another. And it's, anytime you have an adverse experience in the markets, that's all you can do is to keep going one day at a time. Just take it one day at a time. And so I eventually built up an account for my own trading account.
Yeah, excellent. Yeah, no, showing a lot of resilience there, and that's great. Looking back on your career, I wanted to ask you, were there any other really important turning points? Maybe some a lot more positive than that first experience, but were there any moments where you made a really big shift in your trading style, or you developed, a setup that you used that really kind of changed things for you and changed how you approach the markets?
Well, when I first started trading, keep in mind I was doing options arbitrage, okay?
Right.
In the equity options, which is more of a neutral style of trading in terms of having a directional bias, but you still are doing the preparation and work and leaning a little bit one way or another. And I think I have a slide here. So this
Perfect.
was 1981, and I started off by using these SMR charts. Okay, so I get them by hand on a Saturday morning. I paid extra to have them FedEx to me, and this is exactly what they look like. This is a 310 oscillator at the bottom, but at the time they had it normalized in a different manner, so I couldn't really, it took me about 10 years to figure out exactly what it was because the scale was different, but I eventually did. And so each night I would just, draw in the bar and call up this hotline number, plot the fast line and the slow line. And so this process of doing this by hand, helps you like feel in control and start to see patterns and stuff like that. But I want to show you this. You ask about what changed. So in a nice kind of rangy market for the first 5-6 years, swinging, there was a bull market, but you can see here on this S&P chart, there were like, lots of overbought, oversold. Traditional indicators that I kept, such as the tick and the trend and the breadth, were fairly useful in market timing. And then I remember it was I was actually sitting upstairs because I had had a horse riding accident, but I was still trading out of my house. Very expensive to set up your own quoton and lines and stuff. It probably cost me about $1,500 for a dedicated line and another $1,200 for the program. So people got it great nowadays, let me tell you. But if you look at this chart right here at the beginning of 1987, I mean, we just started this creeper mode to the upside. And I just had this moment where I just, like, I had no idea, what the market was doing, or no idea how to analyze it, or no tools or anything to put it in a proper context. And I just realized that I just knew nothing, So this was after like 6 or 7 years of trading. And so that was a big aha moment.
For
You've been
sure.
trading all this while and you're like, oh shit, I have no idea what's going on, right? I think this was the type of stuff I used to plot at night as well. In addition to doing those charts, this was a 5 and 10-day moving average of the market breadth. You could do the McClellan oscillator. There's lots of variations on a theme. And you can see this is just recently when we got pretty overbought up at the top there. And this was something here. I keep track of the 10-day moving average of the high and the low for the ticks. So when that starts to narrow, it's almost like a sign of complacency, like a low VIX. And so that also is a note of caution. And conversely here, you can see where you have a lot of volatility and the range in the ticks is very extreme, and that tends to be more indicative of a bottom. So I plotted all these things out by hand year after year after year, and really kept up all my numbers and my data and stuff by hand for at least 30 years, 32
Wow.
years. And then I started to get like basal thumb arthritis. I lost the cartilage in my thumb, probably too much on the mouse, So a friend made me an Excel sheet so that I could keep track of all that by a different manner. But I really got the most value out of doing everything by hand. Even though I have it all computerized and stuff, it's just not the same as data point by hand. So I know you had wanted to know my early influences, and the first two backers, it really was not about the style or the technique. It was really the fact that they had this tremendous work ethic and this tremendous process. So my first backer, the one who I lost all his money, every night would do the same thing with the SMR charts, write down these numbers, and then we used to have to call in on a silent 700 Texas Instruments, to try and input all our positions to get the plots. It was really primitive back in those days. So watching his work ethic, and then the second backer when I was in Philadelphia, he was always there for at least an hour before the market opened. And mind you, this is floor trading, so you can't even, do anything but just upstairs, doing his preparation and review. And then after the markets closed, he would stay for another hour and a half, just scouring all the books on the floor. You could see where the options were and looking for like the little teenies, we used to call them then 16ths that nobody cared about. And, if he could go and find, spots to buy those the next day. And so it wasn't that he was expecting to make money off of buying these really cheap and expensive options. But what would happen is that if the stock came to life, they would allow him to then trade safely, against the trend. So say, for example, you had bought a lot of out of the money put options, for a 16th, which is how they traded back then. You're not expecting to make money off of those, but what they allow you to do is if there is a sell-off in the stock, then you can go in and purchase stock with the guise of protection. So just a lot of planning and strategizing, simple things like that. And just seeing this consistent routine day after day after day. And I mean, the traders around me that were successful, this is their life. They are, working all the time. So that was the early influence that really helped me. So.
Yeah, and that the work ethic, planning everything out, that's the hallmark of any trading style, like you said. If you're a swing trader, long-term investor, short-term trader, that's going to benefit you, whatever your way of extracting alpha is from the markets. So that's excellent. And I want to ask you, in addition to that, this is a question that I've recently come up with that is one of my favorites, and I think it'd be great to get your perspective. How do you personally define risk, and what is your process for managing it?
Well,
it's a big
on
question, I
the
know.
trading floor,
Yeah.
I think all the floor traders and exchange members in general tend to have a larger standard deviation to their equity curve than, if you go upstairs and, are trading a little bit more money and stuff. We used to trade with a lot of leverage, in the equity options. And so then when I started managing money, it was a different ball of wax. I managed my risk primarily by the equity curve. Okay, so if I started to see, the equity curve doing a bit of a drawdown or something that looked, funky, I'd get smaller. And I was also very strict on position sizing and calculating out the average dollar true range for the futures. And in fact, if I were to pop up a sheet here, could you see it over my PowerPoint presentation? Okay, so that's what I do each quarter. I calculate out a moving average of the daily range and multiply that by the point size. So I can say that the S&Ps have an average daily range of $2,600, just rounded off. Okay. Right. And but the bonds have an average daily range of $1,300. So therefore, in my unit size, I can trade twice as many bonds as I would an S&P. And then I usually denominate it per $100,000. So I'll have a unit size per $100,000, whatever that might be. Or perhaps if you have a $40,000 account, you adjust your unit size accordingly so that you don't end up trading the same size on crude oil that you perhaps would on the currencies or so forth. So I tried to keep it very quantitative oriented for the position sizing. And then I really didn't like to lose more than 2% on a position. Of course,
Hmm.
that
It can
happened,
happen. Yeah.
especially if there were adverse events, but the nice thing was about keeping a portfolio. I usually had 5 or 6 positions going on at once. Is that something is always working somewhere? Okay, something's always working. It's really rare that you have 6 positions on and something's not working. So it made it really easy just to dump the crap that wasn't working. You just hit like flatten, get it out of there, flatten, get it out of there, and then stay with the stuff that's working. And so, you know, it was I didn't back in those days, I didn't use stops.
Hmm.
So the reason is because the size that I was trading was really too great, to put a resting stop in the market. Maybe not the case in the S&Ps, but most of the markets, and the bonds were pretty liquid, but a lot of these markets, you don't want resting stops, on really big size. But, I would always see if the position was starting to not work, and then you
Right.
just start peeling out of it, or just flatten if you can. So that's how I manage the risk.
No, that's exactly what I was looking for. And, looking at all the different markets here, were you always trying to trade different ones that weren't as correlated? So kind of like you said, one would always be working when maybe, others are pulling back, just to kind of give you that, a little bit more stability in your equity curve.
Yeah, it's not like you try to, and you do have to be aware of correlation. So, for example, if I were trading the S&Ps and the Nasdaq, I would trade like a half a unit in each of them because it's basically the same,
Right.
similar position. Not always these days, but same thing like with gold and silver. They're going to, be fairly correlated. So you just have to be aware of that. I might go. I haven't traded a trade in like the sugar for a year.
Hmm.
But I still do the analysis on it every night. I haven't traded a trade in the unleaded or the heating oil for like a good 8 months, but I still do the analysis on it every night. And sometimes you just sort of get in a groove with a couple markets and you just kind of keep on working them because you're in sync with them. So I mean, I would have to say that the metals for the last 2 years, have been predominantly my biggest trade. I haven't traded platinum or palladium, but I trade the copper and the gold and silver. And but then there's also a time just to walk away from them. Like right now, the grains are really coming to life, and I'll show you one pattern that
Hmm.
I detailed out for you. So I kind of left the grains alone for a really long time, but it keeps you fresh looking for different things. But I'll always trade the S&Ps. I almost always make a trade in the crude and the gold. And I used to always make a trade in the bonds, although I don't so much anymore. So,
Yeah, excellent. And a very common question we asked viewers for questions was, how would you describe your current trading style and how has it shifted from how you were trading a few decades earlier?
the truth of the matter is it hasn't changed at all, really. I still kind of do my S&P day trading. Some minor things have changed, such as the way that the market internals work. The ticks are of value on certain days, but they're
Hmm.
of no value on other days. So, and I'd say the last 6 or 7 years, I used to be a lot more engaged with confirmation, non-confirmation. I just threw all of that out the window lately. It's just doesn't mean anything. So, uh, that's changed. The other program I do a lot, it's in one day, out the next, or in
Hmm.
one day, hold, maybe 2, 3 days. I'll always do that. And a lot of times I put those positions on in the evening. So that's changed. The start of the session now is really Asia opening. And I like to initiate at the start of the session. Now, not always, because there could be some major economic data the next day, but, a setup's a setup, and the computer doesn't know the difference. The computer doesn't know if something, is going to come out in the morning or not. So I'm always trying to say, well, what would the computer do? What would the model be doing? Da, 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 da. So you have this like little broken loop in your head.
Hmm.
And because there's going to be news or something every single day, somewhere, somehow,
That's the world.
I am conscious of the crop reports because I've gotten nailed on those in the past. But uh, and then I have the third program, which actually has kind of become more on based off the weekly technicals, the daily weekly technicals. And the thing that you have to realize by having like 3 separate programs divided up into this is that number one, the shorter the holding time, the greater the frequency of occurrence and the higher the win rate. So something like the S&P day trading, I'll have my highest win rate. And my holding time is going to be the lowest. And then on the flip side of the coin, if I'm looking at my daily, weekly stuff where I can put on a position trade and sit on it for maybe 1 month, 2 months, 3 months,
Hmm.
I tend to get 3 setups a year per market.
Hmm.
Okay, so if I have 3 setups per year per market, I might just capture one of those. Okay, so you have to like be realistic. If I have 100 setups and I'm capturing 65 of them, that's doing great. I've yet to beat the computer, but so and then the longer the holding time in general, the lower the win rate. Okay, because you might have a couple false starts, there might be other things, but that's why trend followers can win just 32% of the time, but they know how to, hang on to those winners and really, milk them. So they're just different styles.
Do you,
I,
yeah,
um,
go ahead.
I was, I'm trying to get back to just doing all of it again. And, I have to confess, I was trading pretty hard today and I was having adrenaline rushes. It's like my assistant is up in Port St. Lucie and he's busy doing other things, and I'm trying to, execute and put in stops. And I do much better. I really can't trade the way I used to unless I have somebody helping doing the order entry. So I got to figure that one out.
Yeah, it's a lot to keep track of for sure. Is there among those styles then, are you kind of more gravitating more towards the longer term now, or it really just kind of depends on the situation?
Uh, uh, No, I don't gravitate towards the long term. I love I'll show you some of the stuff that I look at. I
Sure.
love my in one day and out in 1 or 2 days. It's long term time horizons are really tough, because they play with our head. And I really don't feel confident in long term forecasting. I can just feel confident on a daily, weekly chart formation,
Hmm.
and it may or may not get legs. So, but sometimes if I have a long-term position on in something, it's hard for me to do my in one day, out the next day, that type of thing. And what I'm really trying to capture are the trend days or the range expansion or the days where I can trail a stop, and I'll show you what that looks like with this one pattern I got up for you. But yeah, I mean, nothing beats capturing a trend day. So
Yeah, perfect. Did you want to jump to that? I actually wanted to ask you first, do you still kind of typically trade those 6 positions, or has that changed as well? Kind of 2 to 6 positions.
uh well, I'm I had a bunch of surgeries the last 3 years, so I had a lot of disruptions and stuff. So I mean, I had a hip replacement, I had a major shoulder surgery, I tore my ligament, playing tennis. So I just had that, like a Tommy John type of surgery. So, you know, I haven't been playing full tilt boogie just because of
Hmm.
all these other things. And I also took some time off and was playing tennis like 6 days a week, twice a day, I was, that's all the injuries, and, it's always trying to find a balance. I would love to do everything, but like right now, I'm missing the game a lot. And so I'm pushing myself to see how much I can do again before, I start having heart attacks, how, I'm towing the line and trying to find out where is the line for me. So today I was pretty active, and I actually had to go out in the middle of the day and go running for 25 minutes because I just had too much cortisol. So
Well, it
yes.
sounds like outside of trading, you're enjoying things outside of the injuries, of course, but your tennis, that's excellent. That's, we don't live to trade. We, whatever the phrasing is, it's good to have passions outside of the markets for sure.
You know,
Keeps us balanced.
it's yeah, I mean, I thought I was retired, but then it's like, but I love this game so much. It's such a fun, enjoyable game, it's like, so it's like, oh, let me just get back in and, really have some fun playing the game. So that's where I'm at right now.
Perfect. Did you have more to run through here with these slides? I know you prepared some examples for us
I,
too.
I did, but
Yeah.
you were asking about my style, okay?
Yeah.
And I am very much just classic technician, swing highs, swing lows, chart formations, and the market structure with the swing highs and the swing lows. And so, for example, this swing up here, right? This leg was bigger than this down leg and bigger than this up leg, right? So this is a huge increase in momentum. Therefore, you have to be all over looking for that pullback. Okay. That's like a 90% trade. But with that said, you do have V tops and bottoms as well. So, it's all about putting it into a structure. And so that's one thing. I'm just very basic. One indicator, maybe, the Keltner channels, to help keep track of some volatility. And, you know, people would be shocked how basic I am. Just uh, very, very old school, classical, technical analysis. And that works for me. You'll never see me with Fibonacci or Ikimocho or, order flow or any of that kind of stuff. It's like I want the trade, boom, I'm all in. I want to get out of the trade, boom, I'm all out. I don't scale in, I don't scale out. It's like, okay, deal me another hand, with playing cards. Okay, let's get on to the next hand. Let's get on to the next hand. So I'll use that analogy.
And
So
I have a few questions. Sorry, if you go back to that chart. So say you're stalking that pullback, what are you looking for then to actually enter that? Are you waiting for a reversal bar for it to move back higher? What's kind of your actual entry point? Say you're looking for that pullback and then looking to re-enter with that trend.
in a perfect world, you'll have a little loss of momentum, a little divergence down here. You'll
Yeah.
probably be able to see it on an hourly chart. So, there's two or three patterns that I like for reversals. You're either going to get 3 bars price overlap at the bottom of a swing or the top of the swing. So in terms of market profile terms, that would be described as the market coming into balance. Okay, so the
Right.
market coming into balance, and then that would set up a breakout play if you want to be aggressive that way. Obviously, a little divergence at the end of the swing is always sweet, but you don't always get that. And sometimes you not so much on a retracement trade, but some other swings you will have a buying climax, a big range bar at the end of the swing. And if you take out the low of that bar, with 1 or 2 bars, you're probably going to get downside for another, 5 or 6 or 7 bars is sort of how the modeling goes. And I'm very big on levels. Um, I don't draw trend lines. I draw horizontal lines just
Yeah.
for the levels and then see, how we come back into those areas.
And those horizontal levels, that's like where a lot of key swing highs have have kind of, you know, started reversals as well as swing lows. That's kind of what you're looking for to draw those horizontal levels.
Well, there's an old adage, you
Yep.
may not agree with it, but pros sell above previous swing highs and pros cover below previous swing lows. So I'm very much that way. If I exit and it's going to be a solid breakout, you can always re-enter again. It's never a problem re-entering again. So, and it kind of depends on the volume and how the market's acting and the preceding structure, which I can show you. I don't know, did I answer your question? Just the
Yeah, I think
level.
so. Yeah.
You're looking for spots to exit. You're looking for I have something fun. I'll just keep on spilling my guts here for everything. There was a sweet little one today here in what was it? The Russell. Okay, so this is my chart of the Russell here.
You might have to bring it back in. I just see it. Oh, there it is. Perfect.
Okay.
Yep.
So this is actually a 120 minute. I prefer to use like a 240 minute, but you can see this area here. So if you're a market profile person, you would call that a single prints. We jokingly call it the cave fill area. A profile person would call it, it has to repair. So here you can see it went up too far, too fast. Therefore, we have to come back down and fill this in. So you can very much treat these areas like gaps. Sometimes you just get a partial trade into the gap area. Other times you'll get a full repair, in which case you're likely to get continuation. If you never fill it or repair it, then it's very much a breakaway gap. You can see even here, this little area here, you came back down and
Right.
and filled. So anyway, that's just an example of the structure. I normally don't use candlestick charts,
Hmm.
but I do like on the 240 minute. I mean, just to find those little spots, and then during the day, I'm mostly watching my quote board, and just the little bars, but I don't have enough detail to look for a true reversal, this or that. I mean, I just see the tape action that it's stopped going down and it's, acting a little, bouncy support there. And then like copper today, then it started to, I'll show you that copper chart. In a perfect world, I would trade every single market if I could at the same time, but it doesn't really work that way.
We only have
Um,
two eyes.
yeah. But
How much of your trading do you think is based on intuition these days? Because obviously you've looked at so many charts, you've traded so much. How much do you think
I
it's
I
feel?
don't believe in intuition. I
No.
mean, I guess you could say that it's like the sum of all your experience or something, but intuition implies that you have a feeling that you can't necessarily quantify or identify.
Hmm.
And I just don't do that. I have to have a model, so you start to see things if it's going to start to work or not. And like this copper, I actually didn't trade this because I had too many other things going on, but you could just see it start to just creep. And right here, I'm like, God, I know I should buy that, but I didn't, that's
Hmm.
okay. So, but this would be a case of where a market had sort of stopped going down and then it
Right.
did the little flush and it came back up. So I love that if you have a box and you flush down and you come back up. I think that's very constructive. So there's these little classic adages, the bull trap, the bear trap, the push back into the box, which is what we had with the S&Ps on Friday. Maybe it was a little artificial with that crowd strike thing. It doesn't really matter what the reason was, but we did push back down below a really critical support area. And so, and then we sort of stopped right in the middle of that box, and now we'll see how that all plays out. Sometimes you can rotate around these areas for a little bit. So I'll, if you don't mind me just
This is great.
indulging,
Please.
indulging and doing all this stuff on the fly, because I might have posted something on Twitter about this at the time, but this is again, so my husband,
You might have
Damon,
to pull it back in. Sorry. You have to.
I'm
Okay.
just going to, okay. So my husband, Damon, let's get this out of the page, is very much a market profile person. And I am very much not a market profile person. But with that said, you know, you're always learning from different places and different sources and something. So I love these boxes. You had 2 data points for resistance and 2 data points for support. So really important structure if you have that box. And then if you were just to take the middle of this box, I mean, this is like I'm telling you, I'm in big school of the KISS method here,
Keep it simple. Yep.
very simple. Yeah. So you could see we just came right back down to the middle of that box, where in market profile, if you smushed all the profiles together, you'd call that a point of control, one of a point of control, which provided support. So you have several scenarios. Here we just tested it and we bounced back up outside of that box. So that's constructive. Another thing that you can do is start to rotate around that area, because it's like a home sweet home to it. And in your most drastic cases, you will fall right through and go through the bottom of that box. And there was a technician from many, many years ago, Arthur Scleroux, who would say this. I don't know if it's really quite pertinent with this example, but the amount of extension outside that box could lead to the same extension outside the other end. So you have several different models, and you're kind of looking to see which it's going to do at that time. So that, excuse me, this is my water bottle, my water bottle during the day. You can never drink enough water.
Agreed.
And when we get dehydrated, we're not as sharp.
Right.
So just be careful about that. So I'll just go on and, okay. So if you had another question, let's see here. I was going to show you something for fun. Okay.
Yeah.
Because I'm always playing around with stuff. And this is something that I've been doing lately, having a lot of fun with these coils. Okay. So my goal was to come up with a more systematic approach for entry and trade management, so that I can put the trade on and go out of the office and play tennis.
There you go.
And not have to watch the markets, right? Very dependent on our homework at night. So that's a big part of trading. I don't think people quite understand the importance of, doing a game plan at night and your preparation every night, night after night after night. But I love these coils where you get this back and forth, and I like seeing them on a line chart. And for example, if I took a program like TradeStation, you can take something like a parabolic or a volatility stop, and you can do a stop and reverse, and you'll see it go into a drawdown at that point. So that should also be a warning that you've got this coil building, because it'll always be a drawdown when you start to do that stop and reverse type of thing. And that's usually when it's ready for a bigger move. So the moves out of these coils, you can see I've just got a simple Wells-Wilder average true range volatility stop, real old school here. I can attach this with CQG. I can enter early and then trail a stop. I can set it so that it initiates at night when I'm sleeping, and then it'll trail. So lots of ways you can go about that. So with this S&P, even though this is not a flat coil, it was still a coil of a wedge type, which usually is the end of a swing. So all of these are initial conditions that can lead to a a bigger win. And I'll show you a failed one too, because that's always important when you do your work. You have to see
Yeah.
what the ones look like that don't work. So this was a really nice bond swing. And here was the Australian dollar. And I loved this coil here. I thought it had chance to really get some legs and keep going just because this weekly had been so dull and the dailies had been so dull for so long. So I put this trade on and it got to, got something that was nice. And then of course it came all the way back down. By the way, this was a 3 bar up here. So it was a downside breakout from the 3 bar. That's a different pattern
Mm-hmm.
that I have. But you just never know if you're going to get a little or get a lot. This was the euro currency. I like doing this with 240-minute charts, by the way. You could do it with 120-minute. You could even do it with daily. But what happens is if you go out to daily, your frequency of occurrence drops way down. And so that's what you got to be mindful of when you do your research is what is that frequency of occurrence per market? So on a 240-minute chart, your frequency of occurrence of a really choice coil might be 1 every 2 months, So usually it takes about 5 to 8 bars of overlap on a daily chart minimum to build this kind of coil. So this was kind of interesting here because this Russell had a huge long coil, like everybody knows, that. And so I tried this breakout here. You can see it got up here and then it got stopped out. So it was really like no harm, no foul. But that's what a false breakout would look like, or a losing trade. And that's why you trail stops. And then this one was really interesting because, if you had a resting buy stop in here, when the number came out, this is a little deceptive because it makes it look like it was a continuous move, but there was a gap there. And that 1 second after that, it moved like 30 handles and you had like one teeny little check back somewhere in here, just one teeny little check back. And then it was just off to the races. So your fill was not good, but I think it was Richard Dennis or somebody always said that the worse the fill, the better the trade,
Yep.
because the demand was so strong, the urgency there. So, I mean, this was a real outlier in how much money that took out there. And that's what you're playing. You're playing a numbers game. You have to have a certain number of setups. I know if I have 100 trades based off this pattern, 10 of them will probably be home runs like that. So
Sorry, I have a question actually about the last slide, if you don't mind going back. The second coil that led to the big breakout, it almost kind of makes a bigger coil with the first one. They're at similar levels. Is that something you look for at all? Kind of a fall back into that same range area and then look for the next breakout?
You know what? I really like to look for the 3 bars, and I'll show you exactly what that looks like here. I'm going to slide this over here.
Sure.
So, I mean, I was starting to think this market was just dead because that can happen to a market. It just goes dead for a period of time. But as long as you have these 3 bars, so a 3 bar is, so you see this bar here
Yeah.
inside the previous 2 days high and low. That's a 3 bar. It didn't give enough range expansion to pull you in to the downside. But right here, you can see that this bar here was below the 2-day high and above that 2-day low. So pretty much, that serves as a good trigger. Even if you didn't have the coil here, that would still be a different type of breakout trade that I would take. Okay, so that's just a different pattern. But in this particular case, it all set up anyway. So
yeah,
that was pretty extreme. And then I'll just show you 2 current trades that I'm in. I don't know if they'll get legs or not. This is the soybeans here. So you can see they had a nice little coil. Actually, usually on the grains, I'll use like a 120-minute chart because they just not the same hours. But so the beans are coming out the upside. And at this point, I actually initiated them on the opening last night. I went long and I mean, I didn't wait to get triggered in, and I actually sold, I shouldn't have done that, but I sold most of the position at the close just because I'm deviating from my methodology, you know. And then here's the corn, just, trying to
Totally.
get some legs. It didn't quite, that's another reason I took off most of the position. I left one on, but I was like hoping that it would push up a little bit more, but they're coming to life, so that's pretty good. I'll show you what I do too. This is a nice little tool that people can use for themselves. I use Skype. I'm going to bring it over here for you so you can see. And I have like 3 different Skype IDs, and I can make notes to myself. So if I'm on my phone, I can type with, or I can send something that I want to research later to my Skype ID to myself.
Mm-hmm.
And so this is one of my chart libraries,
Oh, nice. Very cool.
Yeah, so I kind of catalog everything on this, and you can see here, this was the work from the coils. I let my assistant on there. This is work from the coils. Another pattern. Let's see. This was another pattern, that I do. I try to look at the average holding time, the frequency of occurrence, and stuff. And this is really work on the trail stop methodology, where I can trail that volatility stop and reverse function, because I would say that maybe only 25% of initial conditions demand that you trail a stop. Okay. There, usually you're better just, exit end of day, exit on the next, morning on the previous day's high, or sell into a rally, or, that type of rhythm. It's rare that you get the runs where you can hold it for a period. So these are all, had to start a different library. So this is like what I'll do is I'll detail it out on a 240-minute chart. You can see this is just a simple ABC here, right? Pretty basic. And then the trail stop got tagged there, but then it re-entered. And then I'll go and show what the daily candlestick chart looked like. So we had some range expansion here and a close outside the Keltner channel. So that's another pattern that I'll do, looking for a reaction back down. It just, it's a little biclimax stuff. And then I have one thing, it's these little dots here are called PF3s, and it's for when the slope of the 2-period rate of change is going down, the slope of the 310 oscillator is going down, and they just highlight really nifty. And you can see this was poised to flip up again. So this was a pretty strong buy pattern. But that's what I'll do. I'll just try to keep on layering on examples for myself, and instead of trying to put everything into an Excel spreadsheet, it just doesn't ring a bell for me. I like to see the visual. And I had another chart library, but I made the mistake of of inviting a few too many people, and then all of a sudden I noticed that I was getting too many comments in there for it to be of much value. I'm like, I'm trying to put in and build this library of all these chart formations, and then all of a sudden everybody's piping in and they're all getting it wrong, and I'm no, I'm doing one just for myself. So that's how I keep myself amused during the day, because it's very difficult to keep your attention and your concentration up throughout the day. And I don't have a TV. I just do not believe in that. For me, that does not work for me. I don't look at blogs. If I post anything on Twitter, it's just because I'm really, really, really bored or something. But I have Twitter closed all day. And then I just have a few friends on Skype who have been on there for up to 25 years, and we post humor in the middle of the day. So it's for me, that's a big let's see here. that is a big tension release, you know.
Hmm.
So here's my humor I posted today. This was from my son-in-law who I had
Yep.
dinner with last
I
night.
saw
Okay.
this as well.
Yeah.
Yeah, this is good.
You know, and so, you know, it sometimes takes the stress off. Everybody's doing their own thing, you know. You know, nobody's making the same trades or anything like that, but it also is a forum to keep ourselves accountable. So we actually have a homework room. So these are ideas that anybody can do. Okay, so
Hmm.
just to show you, okay, this is another friend who's, where did it go, on the Skype room. And so he'll post all his homework, you know.
Hmm.
I didn't even look at it, but you do it, you know, because you know that, okay, he's doing it, so I have to do it, right? And it keeps you accountable, you know, having this routine and ritual. So, you know, homework only, no idle chatter. But of course, we
Idle
still
chatter.
get, oh, discrimination. Boys love Switzerland too. So we have one girlfriend in Switzerland, Ash is over in Puerto Rico, you know, Mandy's in Australia, and it provides some sort of community, but it's a community of your own choosing, you know.
Right.
Does that make sense?
Yeah.
So, and
No, that's
then,
excellent.
yeah. So
For
that goes with these keys to success. It's
Mhm.
like, uh, if you do get an idea from somebody else, that's okay. I just showed you, like, you can play around with these coils and the value of line charts because it helps eliminate some noise. But now you take at it and you have to see where it doesn't work, you know, what it looks like when it does. Is there, how does it work to trail a parabolic? How does it work to trail a moving average? You know, how do you attach that with your execution program and stuff? So you have to start playing with it and make it your own. And you have to do your own research. I've just never seen a professional trader who relies on somebody else's newsletter. Um, Keep an open mind because, you know, flexibility is the name of the game. I can't tell you how many times I think one thing and then it's like, oh, okay, well, the market's not going to get legs, you know. I didn't see that one coming today. I actually had bought some bonds last night, believe it or not, because it was like a nice little buy day. And I exited them just because they really weren't going anywhere. I had like 2 or 3 ticks in them. And then they just started falling out of bed. And I have no idea why. It was just so freak. Okay, this is what they were doing. And I just felt like really lucky, you know.
Mhm.
They were just doing this and then boom, you know. So who could have seen that coming? I mean, it all looks great after the fact in hindsight. And you look at the daily structure and there was a gap there on the yield chart and blah, 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 right? You know, but I just always, look at, you know, we can draw trend lines here and see this flag formation. Oh,
Yep.
that looks so great, you know, after the fact, right? But you know, I just always know that I don't know. Okay. I don't know. So I'm pretty uh, quick to, you know, get real chicken.
And I had a question about the library, which I think is an excellent idea. Are you always kind of saving an intraday time frame and then also a daily time frame, so you kind of get those two perspectives, or does it kind of depend on the setup, the trade idea?
Yeah, I always start the main work with the exception of those coils because I've been playing around with those, but I always start the main work off of the daily charts and the
Hmm.
daily candles because very integral to my way of thinking is that George Douglas Taylor's approach to the market. You know, there's the buying day, then you exit, and then there's the sell short day. And of course, it's not a perfect count because you might be in a breakout where you're getting these extended runs to the upside, or you might start getting a lot of price bar overlap where nothing's going on. But you know, I do like that rhythm a lot. And so the daily candles are one way of monitoring, you know, for what's setting up. So that was the reason I looked at the bonds, is because they had been down 1, 2, and and the 2-period rate of change right here was poised to flip up. Okay, so yeah, it's like about a 65% trade, and it actually was good for a little bit. You can see we did rally up in the overnight market, but that's where you have to be smart and say, okay, it's really rare that a market will rally for 4 sessions. And by that, I mean US morning, US afternoon, Asia, and Europe. Okay, so if we rallied in Asia and we rallied in Europe and we rallied in, the early US morning, it's very unlikely you're going to get anything more. So, yeah.
Yeah, excellent. And that 2-day rate of change indicator, could you kind of describe a little bit how you use that? Is that your stocks or a market's declining and you're trying to identify when that momentum reversal is going to happen?
It's like reading tea leaves. It's
Looking at charts is too much fun.
It's really reading tea leaves, but in terms of statistical testing, a 2-period rate of change has a better signal to noise ratio than a 1-period rate of change, and even a 3-period rate of change. So it does have a very small edge to it. And if you add a filter to that, then you can start to improve that edge. And then you also learn the times when not to use it. So for example, if you had a like an inside, narrow bar there,
Right.
it could be more of a continuation as opposed to a reversal, mess the count up. I love my favorite trading pattern, all through the 80s and the early 90s was we used to get these little buy divergences here in the S&Ps. I used to call it a 5-finger pattern because you'd have day 1, day 2, day 3 would be up, but you don't go home long on day 3, okay? And then there would be day 4 and day 5, and you don't go home short on day 5. I had come up with this golf system, and it was just like, oh, I mean, an amazing, beautiful pattern. And here it was in the bonds. But you just don't really get them that much in the S&Ps anymore. So things do change. It started being, the pattern started unfolding over the course of 4 days, not 5 days, and, but it's a really reliable little pattern. So, and you can see even here, look at this lovely, lovely breakout we had, but it's 1-2 days.
Yep.
It's there's a definite structure for where you get these runs like this. This case was a bear trap, right? It was a bear trap, and that is one of the patterns that can lead to what I call an extended run, although this was not an extended run. Usually the weekly will be a driver for those. So, just lots of little subtle nuances and stuff, but I would write down the reading of this every day, and then I would write down the pivot that would cause it to flip. And now I'll show you something here. I told you I can't really do this by hand like I used to, just because it's hard for me to write like I used to. But this is the spreadsheet that a friend made for me. So I like looking at these patterns here. This is the 2-period rate of change here. This is that 2PF3 down that I showed you earlier, where then I would look for a buy, This is the closes on one side of the 5 SMA, and this is like my little pinball thing. So, I have this for each of the markets here, and it's pulling the data off of C2G into an Excel sheet. And then I can compile them here into, just something that I can print off at night. And it'll look like this and, just help me with my homework. So I try to stay very ritual driven, with this process. And then, because otherwise, I get cognitive biases like everyone, it's, I prefer trading certain markets from the long side only. I prefer trading a few markets from the short side only. I'd love it if some of them just went up and up and up forever, but this is my insurance against those cognitive biases, because I'll keep looking for the pattern,
Right.
and the initial setup, instead of sometimes when we're feeling most bullish, and it's never going to go down again. And you're wondering, how, I got to get some. How did I miss that move? Something like that, it's like, oh, and then you pull out the monthly charts and the all-time high, well, it can get up to 50 again and stuff. And, you have to have ways to guard against that. I'm no different than anybody else. I just know my weaknesses really well.
I love that. I love that. The
Yeah.
market doesn't know you're a market wizard. You gotta follow your process.
I'm Every day, I'm a humble peon that sits down at
There you go.
my desk. And if I don't think that I'm humble, the market will humble me. So, yeah.
Yeah. And outside of the spreadsheets and adjusting that data and adding that data every day, could you walk us through your daily routine? Because you mentioned how important it is to set that game plan to prepare for, that the next opportunities.
Yeah, I mean, at the end of the day, I have two sheets that I print off. One's off of TradeStation and it details out everything. And then I have those other two sheets, but I have a sheet that I write down my homework on.
Hmm.
And see, I'm just very much into these trade sheets. So I used to do all this by hand too. So I'll take this sheet here. It's
Hmm.
it's refreshing the values right now with the yesterday's data. So that's why it looks a little funky. And then I'll write down my positions on here. I'll write down, if I don't write down exit, I'll forget to get out. Seriously. I mean, I have to tell myself what to do, put in a stop here, I'll write down if this is a 3 bar, I have a little notation, so, and then when I come in the next morning, sometimes it's completely changed, and I'll show you what I use here. This is kind of fun because I can slide these things over to
Yeah, it's
Zoom.
good.
Yeah,
I,
yeah, yeah. So
I
you
liked
see,
those two little notes too that you had on that sheet. Be a trade management pro, and then winners admit
winners
mistakes are.
readily admit errors. Well, I have to
Yep.
confess that has been on there for 40 years, so I make a lot of mistakes with execution. I just do. That's why I prefer not to do it myself, but it's like fix mistakes immediately. So like today, I don't know, I was trading the S&Ps and the Russell, but somehow I ended up initiating on the NASDAQ, and I didn't even realize it, until I looked up, and I'm like, I didn't buy that, and so I didn't even look if it was at a profit or loss. I just flattened
Sold.
it, I just, that was not what I intended to do. So if I make this here, it'll be a little bit more interesting. Okay,
Hmm.
so I come in the morning, and these are 5-minute charts, and my day starts at 8 a.m. Eastern time. Okay, so I can see the overnight gaps. And for example, the copper gapped down, and then this is the previous day's low. The gold didn't really gap, but the silver gapped down and was holding previous day's low. So a lot of times I'll find that the market will start to move away from the gap or towards the gap. It's just like classic gap style trading. Mondays are different. I have to say Mondays wig out a little bit because, Sunday night, there's a lot of action that happens Sunday night, and you had the weekend buildup. Um, but I very much key off the previous day's high and the previous day's low. So that's what all of these are. The Russell was interestingly an outside day. If you looked at it, took out Friday's low, and then once it started to come back up to that opening price, it's going to take out that previous day's high, just
Hmm.
because of the structure on the daily charts. So I'll look at this for the first hour before so it's actually an hour and a half until the NYSE opens. But there's like some fun little scalps that you can do and stuff. And, it's just a way of perhaps I had a very strong buy day reading for the day before, that night before, but I didn't put it on in the evening. And of course, invariably, the market will have rallied in Asia and rallied in Europe, and, it'll gap higher. That was the case with the S&Ps today. We didn't have a huge gap up, but assuming something like this, then you'll have to buy a higher low. You'll have to wait for it to pull back. You can't chase, so it gives you a framework to, you could actually short first, even though it's the first day up, but you can short first and then look for your buy day play. So this is pretty much straight out of that Taylor trading technique. I think people try to read that too literally, without really understanding that he's talking in concepts.
And in addition to the high and low, do you look at pivot points at all as key levels on an intraday basis? R1 or S1?
Pivot
Yeah.
point for me is always a swing high or a swing low.
Okay.
Okay. So that's my definition of a pivot, a swing high and a swing low. And yeah, that's absolutely what I do. So for example, let me just see here. Get to a
And thanks for showing all these examples. These are excellent.
You betcha. The bonds no, was it the bonds? It was this gold. Okay, so I had this gorgeous I can show if this. So this gold coming in had been down 1, 2, 3 days. So this was Friday's move in gold. Now, I'm cautious with gold because there's still an overwhelming amount of bullish sentiment there. The commitment of traders report is not something that I trade off like some people do, but I'm still aware of the fact that there are a lot of longs in this market. So after you've had this type of big trend day, then I have a trade that I call the Z day, which basically means you can short a rally or buy a dip. You can fade whatever it does first thing in the morning. So I actually missed, I saw this bear flag right here. It was on this nice, gorgeous little 120-minute chart, and I saw it and I didn't make the trade, I mean, a lot of times I see a lot of stuff and I just don't make the trade, but I didn't buy it either, but it was a bear flag. So I'll always like write down what that swing low is, because once it started to move down, it's like, okay, there's pretty good odds it's going to make a little retest of that swing low. And then I did initiate to the long side here, and I sold it like about $1 higher above when it came out above that previous, let's see, high or low. So I have this on most of my charts. So this was what it looked like down there on a 15-minute. You can see this nice little loss of momentum into this little dip here. Crap, sorry about that. Where did it go? Thanks for your patience here.
No worries, no worries.
So yeah, so this is Taylor. You're buying below the previous day's low, and you're exiting it when it comes up above it. I didn't exit up here. I stuck an offer out just up here, and I got lucky and flipped it out, and then of course you feel smug for about 10 minutes, and then of course it continues
Goes higher.
Right? So what? So it's all part of the game. You just have to have a good sense of humor about it, So that's the kind of stuff that I do, trading around those previous swing highs and swing lows, and just, the little bit of a rhythm. The fact was that, you had to do your homework. The night before, my homework said that this was going to be a Z day, some two-way trading there, and then it was just a matter of if you weren't engaged with something else. Because sometimes, I'll have like 12 setups on my sheet, but I might only do 3 of them because you get involved in, trading another market. So, and then sometimes I just I just have to hit flatten everything and take a deep breath and go outside, just because I'm very intense, with the
Hmm.
concentration. And I have to be careful that I don't get my cortisol levels so high. So, today I went out for like a run for 25 minutes. I stayed long the gold and the grains, but I found that anytime I hit flatten, I can breathe, I can see with some objectivity, then I can put on the things again that I really like, but it's kind of a cheat way just to get rid of the losers too, get
Yeah.
rid of everything, it all cancels out, but then let's put the winners back on again. Probably not the most, organized in trading there, but, I have to get into my groove again.
If it works for you, that's what's important. And it kind of goes to your last point here. Above all, take care of your physical and mental health. That's so key.
I can't emphasize that enough, get the good night's sleep, take your supplements, eat right, and you have to do physical exercise of some sort or another. You have to, just to release the stress. And I mean, that is one thing that I have always been, just tops at, trying to, stay in my best physical condition and, yeah, the mental stuff. I got a pretty thick skin by now. Everything
Yeah.
rolls off, but I have my 3 or 4 days that I'll, have a little depression too. And you just have to talk to some friends and go out for dinner and make some jokes and, love your dogs and do that kind of stuff.
Yeah, perfect.
Feed
Did
carrots to the horses.
There you go. There you go. Linda, this has been really amazing. Did you have more that you wanted to cover here, or was this kind of your closing slide there? Oh, perfect.
Just on the trade management stuff, this is just me. I don't scale in and I don't scale out. But usually I will say that the trade management part of the equation is the most neglected. Everybody wants a setup. Give me the setup, for the coil and stuff. But it's the trade management that's going to make or break your bottom line, because if you get the trade management down, then it's scalable. If you don't have it down, it's not scalable. You're going to be inconsistent and so forth. But if you can get consistency in your approach to trade management, I mean, it might be entering and exiting after 2 bars, I don't care what it is. But once you're consistent, then you can make it scalable. And so, especially, the market has these incredible outliers. That's what makes it such a lucrative and fun game. But what'll happen is that if people make unforced errors or they're in some losers, invariably they're going to sell their best position. They're going to sell something that they have a profit in. And so, you just can't do that. You just cut the little crappy ones loose and find a way to hang on to those outliers. And that's really a big name of the game, hanging on to the big winners, and they just don't come along that often, and you can't force them. And then the trade management, I already showed you, I like ATR functions for everything, but you could use a parabolic, you could use a moving average, just you have to have something. And like I already said, most of this, the shorter the holding time, the higher the win rate. I mean, anybody can get a 90% win rate on the S&Ps if you're scalping for 3 ticks, It's really not that difficult. But you hold for a longer time and the win rate's going to go way down. So it's all a trade-off, and you have
Right.
to do what's going to work with your psyche. And so you can see other presenters and get ideas from them. But if you're newer on the learning curve, it's like you might try it for 3 months and no, that's not really your style. And maybe you'll try options for 3 months. no, that's not really your style. It's like trying on hats, you know? And so that's one of the other things too that takes people so long in part of that learning curve, you know, is trying on all these different hats and styles. And you can't try to do too much. I probably did a disservice, you know, talking about the different things that I do, but it's like you know, it's like I've been studying orchestral scores for 40 years. So I know all the instruments and the moving parts and pieces. So, you know, if you're just starting out, you're going to learn to play the violin or the piano or the guitar or one, you know, musical instrument. And then maybe you add to that. And so it's the same thing with the trading, you know, just don't overwhelm yourself because then you start to frazzle yourself. And then once you've found your style, you must see, you know, does it work in consolidation? Does it work in a trending market? Does it work in a bear market? All that kind of stuff. And then the frequency of occurrence. I can't tell you how many people I see posting stuff. And this is like from some of the technicians groups that, you know, I've been in, and there's like sample size of 12, you know? Well, even if you have a sample size of 18 or 20, say for example with seasonals, okay, let's say a seasonal has worked 90% of the time for the last 20 years. That means on a walk forward basis, it's only going to work 66% of the time, you see? Because it doesn't have a high enough confidence factor because there's not a big enough sample size. And so I see people extrapolating these things and then they start to get into trouble, you know, when it doesn't all work out that way. And okay, I just have one last slide for you. This is
No,
fun.
this is all gold. So please,
Okay,
please.
so this is fun
Yeah.
because this is a slide that I had from a different presentation. And everybody's like, what's your favorite setup? You know, what's your,
Yep.
like, is it a bull flag? Is it this? Is it that? You know? And so this is just to put things in perspective, okay? Because I love cards. And a deck of cards is 52 cards. It's a closed system. Okay, that means that there's no other inputs or variables coming into that closed system. So we can, you know, count the cards and, you know, get an idea as to that kind of stuff. Okay, if you take bridge, which is another game I love, but I don't play right now. It's just too intense and time consuming. There's 635 billion bridge hands possible. Billion bridge hands. And if you have four players, there's 750 trillion possible hands. This is for a card game. This is for bridge, okay? So you can start to see all the variations out there. Nothing ever happens exactly the same way, but we would like to define it in a linear basis, you know, so that you think it's going to, you know, be these little equations and stuff that we play. I mean, that's just crazy to me. And that's why it'll take a minimum of 10 years minimum to become a bridge master, you know, which I'm like the furthest away possible. But I've got a neighbor who is she's in her mid 70s. She's four houses down. She always wants me to play bridge with her. And she's got me on this bridge base. And I'm like, no, Marcia, I just can't take it today. I can't take it today. But she is up like at 7 in the morning playing with people around the world, okay, on this bridge base thing. And she goes to bridge games. And I mean, this is her life. And I watch her play bridge. I go over there and I watch her play bridge on this online stuff, and something comes up, boom, she makes a place. Something comes up, boom, she makes a place. You know, I would have to sit there and think about it for like 10 minutes, you know? And so that's sort of how the market is. The longer that you're in there and the more experience that you've got, like I could just practically do some things, not many, but some things in my sleep. I just have, it's not intuition. It's all that
It's
continued play and
experience.
experience. Yeah. So, you know, Wyckoff is also my hero for just basic technicals. And so I'll just leave with this, that the market never behaves exactly the same way as it did in the past. That's just pure Wyckoff. Each price move is unique. So the context is extra important, you know, and it's human nature. We want our world to be orderly, to have equations that we solve. You know, we don't like the fuzzy variables and the little gray area. you know, but that's the importance of taking this Bayesian approach, see, which is just taking each data point one at a time. And as you get a new data point, you update your models. If you get a new data point, you update your models. And that's what you must do as a trader. And then you will maintain your maximum flexibility. So, and you won't be projecting, you know, that something has to go here or has to go there. So, there you go.
Perfect. I think that's a fantastic place to leave it. Linda, you were able to share so much in just a short amount of time. Thank you very much for your time. I really enjoyed it. I'm gonna, really enjoy watching this back. To everybody watching, I hope you enjoyed as well. Please thank Linda in the chat right now if you did. Subscribe to the channel as well. Linda, thanks again for your time. If you had to leave everybody with just one last bit of wisdom, encouragement, what would be some kind of final words?
Oh man. You know, it's awkward in the world nowadays with all this chaos that we see around us. It's exacerbated by digital mediums and social media and all that kind of stuff. And I just would say that the more positive of an outlook that you can find in life, it could just be one friendship or one good thing in your life, and you know, things to be grateful for. You know, even though we have all this technology that's wreaking havoc, we do have advances in medicine and other things and so forth. And you know, if you are in a state of depression or anxiety or where there's negative emotions, I think it will carry over into your trading. So, you know, just you don't have to trade every day if for whatever reason you're just not feeling, you know, good about the day or about life. Just don't force it. You know, you can do some research and or maybe talk to a friend and stuff. But I think it's really important to stay optimistic, which is hard, but you know, just find something to be positive and optimistic about. And you know, for all of us, usually it's going to be our friends. So there you go.
I love that. That's a great way to end it, Linda. And yeah, there's not much that can not be improved by a walk outside with a friend or with a family member and, a good night's sleep, all of that. So, Linda, thank you again for your time. I really enjoyed this. And we'll be right back with the next presenter. Stay tuned. Thanks.
Thanks. Bye.